If you've been paying attention to the automotive industry or even just electric vehicles over the last few years, you would have heard about NIO, a China-based EV company whose stock could be poised for huge growth. The question is the risk worth the reward? Before I get into it, if you're a beginner Canadian investor and you're looking for tips, advice, or starting points, I've created a small free ebook to give you some guidance. All you have to do is sign up with your email to get access. As we've slowly entered a recession, the entire stock market has dropped, hitting tech stocks the hardest, especially unproven stocks like NIO. Now is the perfect time to start buying stocks at these super low prices. The issue is, which ones do you choose, how risky do you want to go, and how long until you see potential returns? I haven't been doing many stock review videos lately. To be honest, I'm not sure what to invest in. Everything has been dropping, so it's all looking attractive right now, but I'm not sure how much lower we could go. We definitely haven't hit the worst part of the recession yet, so I'm afraid to give advice to investors, but here's what I've been doing. I currently own 1,500 shares of NIO, and I've been selling monthly covered calls, earning about $1,000 per month. I saw NIO drop from $61 per share to just over $20 per share, which is when I decided to jump in. The stock is down 67% from its all-time highs. It might be a good time to buy, but as the recession and supply chain issues take their toll, the stock could have further to drop. Personally, I think $20 for me was too early to buy. I probably should have waited until the stock was 15 if it ever hits. And if it ever hits 10, I'll be super stressed and angry, but I'll probably double my holdings. I do believe in the stock in the long term, but it's not without its risks. Let's talk about the risks and potential downsides first. With China committing to a zero COVID policy and recent lockdowns in Shanghai, it's putting a severe strain on NIO's deliveries. NIO delivered over 10,000 cars in July 2022, which is great. It's 26% over last July, but it's down from June 2022 when they had over 12,000 deliveries. The company was initially forecasting delivering 600,000 cars by the end of the year, but they had to revise this forecast. They've only delivered 200,000 cars and it's already halfway past 2022. If you're looking at NIO stock and you're wondering if it has a good PE ratio, the average price to earnings ratio for the S&P 500, for a stock on the S&P 500, for example, is 15. So it would take you 15 years to make your money back in theory. Looking at NIO, you'll notice it's zero. Since they're still a new and growing company, their earnings are negative, so you can't have a PE ratio. That's why it's considered risky. That's why many risk-averse investors should avoid the stock. Personally, I like risk. It's why I have 1,500 shares and would consider adding another 1,500 if NIO drops to $10 per share. Another risk I want to talk about, and I've never personally experienced this, is the potential of NIO being delisted. I'm going to read an excerpt from a news article that briefly explains why this might happen. NIO investors have had to deal with the possibility that the company's shares could be delisted in the US because of the Holding Foreign Companies Accountable Act, which requires foreign stocks listed in the US to have an auditor that can be examined by the Public Company Accounting Oversight Board, PCAOB. NIO, along with many other Chinese companies listed in the US, don't meet that criteria yet. Even if NIO gets delisted, it doesn't mean your shares go to zero. They'll take a massive hit though. They're listed on the Singapore Stock Exchange. You'll still be able to sell your shares. It'll still be worth something, but it'll be much harder. If you're not trading in the US, where all the volume is, it'll be harder for sure. Let's talk about some positives or potential opportunities about the stock. Most of NIO's sales come from China, which is the largest car market in the world. In 2021, 21 million cars were sold, and the number is expected to increase every year. The number of electric vehicles being sold are increasing as well, which is perfect for NIO. An opportunity is NIO's growth into other countries. With NIO hitting $9 billion in revenue, only selling in China, you can imagine the potential revenue as they expand into the rest of the world. By 2025, management plans to be in 25 different countries. Another positive is the rapid expansion and growth of their delivered vehicles even during a pandemic and a recession. In 2019, they doubled their deliveries over the prior year. Then in 2020 and 2021, they doubled in each of those years as well. Granted, the doubling can't last forever, I get it, but imagine their sales as we come out of this recession. Hopefully it doesn't last more than 2 years. The average recession lasts 18 months, so it'll be interesting to see what NIO can do as they expand into other regions by 2024 and 2025. The current price of $20, even if it drops to 15 in a few years, if we look back, you'll be kicking yourself for not getting in. Again, I'm biased. I make monthly income off this stock. You can watch some of my options trading videos if you're interested in learning the covered call strategy and how I make monthly income. Just like to wrap this up, I like the stock. It's more of a speculative play, but again, I think there's a place for speculation in everyone's portfolio. I'm going to end it here. This is just a brief breakdown of the stock and what I think about it. I'm not going to go too deep into financial analysis and breaking down ratios because nobody seems to be interested in that. Everyone likes these very quick, brief recommendations of stocks. I'll probably break down stocks maybe as we come out of a recession when they have healthier balance sheets. Let me know if you have any questions and tune into the next one.